Good evening and welcome to today's market wrap-up. What we saw today was essentially a broad-based relief rally after all the negative news was priced in. Despite the major political event of the attempted assassination of former President Trump yesterday, the market absorbed it remarkably quickly, within about 12 hours. All three major U.S. indices closed higher, and the A-share market in China performed even more strongly. The Shanghai Composite gained 1.36%, while the Chi-Next index surged 3.43%. Capital clearly switched from a risk-off mode to aggressive buying. So what drove this rally? There are two main factors working together. First, the U.S. June Producer Price Index came in exactly as expected, which alleviated fears of a potential rebound in inflation. Second, the assassination attempt was not classified as a systemic risk escalation, which actually triggered a sense of relief among investors. The money flow was very clear. It went straight into tech stocks, cryptocurrencies, and A-share growth sectors, not into traditional safe havens like gold or cash. This tells us that the market's primary focus remains on macroeconomic data, not geopolitical tail risks. We put the probability of this assessment at 85%. Let's walk through the global market path today. During the Asian session, the A-share market led the rebound, with capital concentrated in technology and growth sectors, riding on the pre-market strength of U.S. futures. European markets lacked real-time data, but given that U.S. futures and the VIX had already shown signs of stabilization before the open, European markets likely followed the upward trend in risk appetite. After the U.S. market opened, tech stocks and crypto-related names led the charge. Nvidia gained 4.21%, and Bitcoin rose 4.74%. The key turning point for the day came at 8:30 p.m. Beijing time, following the release of the PPI data. Once the market confirmed that inflation was not exceeding expectations, it accelerated its upward move. The sentiment leaders were clearly A-share tech stocks and the Nasdaq, while the laggards were mainly China-related names affected by the U.S. entity list. Now let's look at some key data correlations. The U.S. dollar index came in at 100.94, down slightly, while the offshore Chinese yuan remained stable at 6.7730. This provides valuation support for Hong Kong and A-share markets. The simultaneous rise in both U.S. and Chinese stocks broke the previous pattern of A-shares simply following the U.S. market lower. This suggests that Chinese assets are indeed gaining recognition from incremental capital, rather than just a passive follow-through. The 10-year U.S. Treasury yield fell to 4.59%, a drop of 0.52%. Lower real interest rates, combined with inline PPI data, have eased the pressure on the high valuation structure of tech stocks. A weaker dollar, lower bond yields, and rising stock prices. This is a classic configuration of improving liquidity and a rebound in risk appetite, which is very favorable for equity assets. Looking ahead to tomorrow, if U.S. futures can maintain their strength overnight, Asian markets, including Japan, South Korea, and Hong Kong, are likely to follow with gains. For A-shares, if trading volume continues to expand, the rebound has a good chance of extending. However, we need to keep a close eye on the direction of northbound capital flows to confirm whether the incremental money is sustainable. The strongest capital flows today were undoubtedly into tech growth stocks and crypto-related names. The weakest areas were mainly sanctioned or high-risk technology stocks. Let me give you some clear conclusions. First, today's market action confirms a risk-on rebound after negative news was fully priced in. This assessment has a high probability. Second, the capital flow has clearly shifted toward technology and growth, not defensive assets. Third, for tomorrow, we lean bullish but with caution. We need to wait for confirmation of strong northbound capital inflows before adding positions. If we see large-scale net selling from northbound capital, we should shift to a wait-and-see mode. Overall, today is a positive signal, but its sustainability needs to be confirmed in tomorrow's session. Thank you for watching, and we will see you tomorrow.